So I think we're all here. Welcome, everybody. I can see we've got a mix of TRG members. Hello. And certainly I see half a dozen, maybe 10 or so people who are attending, I guess, as part of our spring open house. So they're guests of TRG. Welcome. Thank you very much indeed for coming along. So what we do in TRG once a week is we have a general open Q&A. So Jeff, my co-founder, and myself, we're on hand to answer any questions that are trading related, to a degree platform related. Jonathan, our community manager, is here to answer general things around TRG. And we go on for as long as we need to, 8 hours, 10 hours, 3 days, no holds barred. So what typically happens is TRG members will pop their question in the chat and Jeff and I will talk around it, or, if it's a complex question or it needs a bit of back and forth, we can unmute people. But for the people who are new to TRG and, kicking the tires, and maybe you've been to some of our previous open house sessions, like the Sunday reopen that we did, we did another one last week, didn't we? And my brain is a bit. We did a fishing trip.
The fishing trip.
That's right. I was trading. Yeah.
Yes.
You may just have some general questions about our approach or trading in general, or wondering why your MACD crossovers aren't working, or perhaps you might want to learn more about our educational approach, our upcoming boot camp on the 5th of April, what it entails. So we're on hand to answer anything. It's an Ask Me Anything session. So kind of the ball's in your court. No question is too dumb. We may explain why it's dumb and we'll give you food for thought, but we won't admonish you.
And Lee especially loves to talk about backtesting, so make sure you get all your backtesting questions in.
It's something like that. So, we're happy to call out Furu BS that we think is Furu BS, but explain why as well. You'll find we're very transparent in CRG, and we talk straight. So it really, as the title goes, it's anything goes. But, ask away. Don't be shy. Put questions in the chat or stick your hand up, ask to unmute yourself, and we'll be happy to chat around it. So, I don't see anything at the moment. Stephen's saying, what a pretty chart. Yeah, thanks, Stephen. You've seen this before. I've been working on revising some of my chart books over the past week. I wasn't trading much last week, not so much this week either, actually. I'm deep in my coding. But I'm quite pleased with this. I've got to adjust some of the black background colors so that I've got total consistency. So
black levels matter.
Yeah, and true black 000 is a little bit too black. Oh, very good, JVC. That was worthy of me. And that's a whoosh parrot for me.
Oh, geez. I wasn't sure if you were just going to let that one go or it missed you. Oh, I'm sorry. That was just dreadful.
And it isn't even April Fool's Day yet. How about that? Very good.
Just you wait. Actually, honestly, I hate April Fool's Day, but, that's a strange irony with me.
Indeed. So Aviv, one of our TRG members, has asked a question. What's the importance of the ATR? Any idea? Well, look, let me explain how I use it, Aviv. So, what I'll do? Let's share my other screen. So in terms of my point of view, my view of the world, what I do in Sierra Chart, I think you've now got a screen with 4 domes on the top left and a TPO to the right of it.
We do, yes.
Cool, very good. So on here, I run a couple of daily charts, and this is my ES daily chart. I'll just use this to get a general sense, but I use the Sierra Chart ATR, average true range, on here. And I run it over 21 days, so rolling trading, month give or take. There's no right answer, but a month is kind of logical to me. And what I do with this is I don't display it. I'm not interested in it as a number, but on my main chart, so really my domes where I project levels, and let's switch back to the other screen so we can explain this. This one. Here we go. So on this chart, on the left, I've got various inflection points or potential inflection points, which are structural levels. They're all in this appealing shade of cat pee yellow. And you notice I've got the labels on the far left. I don't actually care what they are. In my decision-making process, all I care about is, oh, here's something that is a potential inflection point, just be aware of it. If it's a TPO value area boundary or a volume profile value area boundary, or the VPOC or what, who cares? Yeah. All that matters is their levels where potentially we might get a reaction. So I just want to draw my eye to them. However, what I do is I pull the average true range into this chart and I hide it. Then what I do is from the overnight session, I will add the average true range to the low of the overnight session and subtract it from the high of the overnight session. So it's going to appear somewhere, should appear somewhere, here we go. So this is taking the 21 trading day average true range and subtracting it from the high of overnight. So it gives me an idea of on an average day, of which there's no such thing, but here is where, if we were an average day, here's where we potentially could get to. So I'll use that as a line in the sand once we're underway to understand, okay, how far could we go? And I'll also compare this level to other structural levels on the daily charts, on the TPO and this kind of thing. So I'm purely using it as a guide, which is absolutely wrong and incorrect, but it's giving me a very rough guide as to where an average day could go. Amy saying it's like a fish finder if you do fishing from boats. Yeah, that's a good way of thinking about it, Amy. It's, you know, all things being equal, which they're not going to be, here's where we'll end up. Of course, we're not going to end up there to the tick, but it's if I fill my car up and I know that I generally get 300 miles out of a tank, it gives me an idea of how far I might be able to drive today. It's that kind of thing. So I saw another question from Arshad, and JVC answered it in the chat, but let's see. Arshad is asking, let's say the market is zooming up and you suddenly see a huge number on the ask side of the footprint. So let's be clear. So that would be something that's traded, Arshad. Yeah, if it's on the footprint, not in the dome. You're then saying, how do you know if it's still aggressive buys up there? A huge passive limit sell order by maybe a bank or something, so maybe it's time to short there. Well, I don't actually care who it is. You know, is it Dave, the London office of JP Morgan? Who the hell cares? Doesn't matter. But let's clarify let's clarify your terminology, Arshad, because you're saying a huge number on the ask side of the footprint. Do you mean the footprint? In other words, it's traded? Because you're also referring to passive limit sell orders. So if we're moving up, as we are now, yeah, we're only going to get a big number as what's traded. Are you talking, in fact, about big liquidity in the dome? So can you be specific in your answer? Say either dome or footprint. And I'll speak to Peter's point in a minute, but Arshad, can you just clear up? Are you talking about here or are you talking about here? Because these are very different things. Okay, I may have made Arshad's brain explode. Let's have a quick look at. So Peter's saying, hello, TRG JVC. For those who don't mind taking the long road instead of the boot camp, but wish to do the quarterly, yearly membership, can they still learn directly through the vast content provided, albeit very long road, but still be on par as someone who did the boot camp in a month? JVC's answered this pretty well. The boot camp is a boot camp. It's going to allow you to quickly assimilate what's important, and after a month you're going to feel pretty confident about what you've learned and be able to apply it. If you do this passively by watching our various clinics in our library, I think you're going to be overwhelmed. that is the experience we have from a lot of people that join TRG passively. They, even if we give you pointers of watch this video, and go through an order, just the lack of interaction tends to take people. It makes it a harder learning experience. Whereas if you're hearing Jeff and myself teaching live, going through live examples, it's much more interactive and you're getting a context. Plus, you can ask a question as it's pertinent, and we will expand on it.
And I'm actually an example of that, because when I joined TRG a year ago, this month actually, I believe, and there was no boot camp yet. So I was exactly in that situation of looking at all the content and just saying, "Oh my God," and it was really tough to absorb, and it was brutal. And then the boot camps came along, and I went through some of those as well, and I became community manager and everything, and I've been through all of them now. And every time I just think, man, I wish I'd had this at first. This is just such the better way to start. Oh my God.
So, Pete, you're going to learn either way. You're going to get access to good content, but I think the level of personal effectiveness in your trading, the experience is going to be far higher more quickly in a boot camp, because it's a boot camp. So you can see, but even what I'm saying about, selling recordings, no, because it's passive. You learn best actively. Yeah. Frankly, the best way of learning is face-to-face in a classroom with a whiteboard where we can iterate. Doing it live over Zoom and highlighting stuff is next best. Watching a recording of something that has happened in the past is less effective. Simple as that. So you're going to get the best ROI if you do a boot camp.
Because the boot camp is hardcore. I mean, for those who have not been through it, I mean, it's not, just sitting there and they go through a scripted presentation and some slides. It's not that at all. I mean, there is homework, there is interaction, there's calling on people, there's live market analysis as things are happening. I mean, it's intense. So.
Yeah, totally. So that's my recommendation, Peter. You're very welcome to join. We can give you guidance, but I think you're going to get much better bang for your buck on bootcamp. As you can see other people, members and bootcamp grads who are saying this. Tom McDonald's, brilliant. So Arshad saying yes on the footprint. A big number on the ask could mean two things. Either more market order buys or a traded limit sell order that also appears on the ask side. Okay, Arshad, you're confused about what happens when something trades. Yeah, market orders fill limit orders. Yeah, so any volume on the ask side is showing aggressive market orders that have traded into limit orders. Yeah, so it's not, these are aggressive buyers or, it was a limit sell order. It's both, because there's two participants to every trade. There's an aggressor, yeah, and there's a passive limit order that the aggressor is trading into. They're either lifting the offer or hitting the bid. So, something we do in the bootcamp, we really drill into what needs to happen if we freeze the dome here, what needs to happen for price to move. So I think you're confusing yourself by overthinking the mechanic of why price moves up and down and the relationship between market orders and limit orders and aggressors and passives, or market makers versus market takers, liquidity providers. So I can't really answer your question, because there isn't a recognizing which is which. Yeah. So you are Amy. Okay, fine. So you've got it, Arshad. Okay, fine. Yeah. So it's really fundamental. This is not meant to sound patronizing. Yeah. It's really fundamental when you trade to actually understand what this thing means, what this thing is representing, and what actually happens when something trades and how we record that, because the footprint is a representation of historic trades. historic trades can't happen unless there's liquidity. So we have market orders trading into limit orders. Yep. So trying to get into what does this mean and who's behind it, and is it X or is it Y? Who cares? Yeah. I don't care if it's Dave on the London desk at JP Morgan, or if it's Helmut in Frankfurt, or if it's Amy in the New York desk. It doesn't matter. Yeah, we will never know who it is, what their intention is. What we can do is identify, okay, here's a pattern, and between the patterns that we see in the volume and between clues that we can see in the liquidity, and also understanding market structure and probabilities of stuff happening in the market structure based on statistics, then we can start to think in bets and formulate, okay, here's a likelihood of something that could play out, and here's how I can position myself to capitalize on it, and here's how I'm going to recognize when I'm wrong. Yeah. Okay, I'm going to come back to your iceberg question in a minute while I catch my breath, because I'm going to say, well, short answer, what are iceberg orders? They're not important to you, is what they are. Yeah, but I'll explain this in more detail as to why. But there was a question further up.
Lee, let me just jump in for a quick second here. If you think it might be helpful, we could quickly look at a jigsaw dome with orders and trades going by on the footprint as an example of this. If you think it might be helpful, I have it up. So.
Okay, let's see where we get to. I mean, Arshad, welcome you. I'm not sure what platform you're using, Arshad. So, if you want to see Jeff's view and we can see the tape combined with everything else, and then we can
my point was to show the difference between orders and trades that are filling, because I think that's a constant confusion of people.
Okay, let's see where we get to. We'll get back to this iceberg thing. There's a question just up here, which I feel I missed. It was after Pete's question. Was it Lewis? Fish finder, long road, must be Lewis. Okay. Hello, Lewis. Welcome. I'm trading at the moment using a spread betting account with FXCM. Okay. Well, someone's drawing on my screen. Look at that. Hope they don't draw anything rude. I have a volume profile. Okay, remember, Lewis, you're seeing the volume at FXCM. Yeah, you're not seeing the actual volume on a futures exchange. And you're using the daily chart to look for a big move, then finding high volume, low volume node levels with the profile on the 30-minute looking for continuation. You trade around your full-time job, setting entry orders, so you're not normally at the screen when price hits the order. Okay, so you're taking a lot of risk. Do I think using order flow would still be useful for this hands-off style? And what are my thoughts on using a spread betting account? Okay, order flow is useful on every time frame. Yeah, so if you are using the daily chart, I'm using the daily chart, Lewis. So I'm looking at market profile, TPO structures. I also have a footprint, happens to be a volume profile where I'm exposing the bid and ask numbers, and I'm also showing the delta at price. Yeah, this is allowing me to qualify levels within each session or daily session, and I can qualify the edges, do they look strong or weak, and I can qualify areas where there is supply and demand, and where we're trading relative to the delta at price gives me clues about where stuff is positioned. So order flow is absolutely useful on any time frame. Yeah. The challenge, well, you've got a couple of challenges in what you're describing. First challenge is if you're trading off these really long time frames, you are potentially taking on a huge amount of risk. I mean, these are 30-minute footprints here. Yeah. So you can pick your level. The beauty of order flow is you can start to tighten up your stops. So if let's pick an example. If I was doing something like we bounced off the high 3 times this morning. It was this level here, 52, I think. Yeah, if I was wanting to try and trade back to the high, then by looking inside the traded volume at the base of even each 30-minute candle, I know that I've been interested in an entry around here or an entry around here. So my risk starts to get tighter. Yeah, and you might say, oh, you're just putting your stop below the low of the candle. Well, I'm actually putting my stop below the low of this pattern in the order flow. If I didn't see this pattern, I wouldn't be interested in entering here. Yeah, so I'm not using price. I'm using the volume at price to determine the area where I'm interested, and it also tells me where I'm wrong. So that's how order flow can help you. You're not using, oh, even let's say I entered a buy limit here, 46.75 to get back up to the high. Yeah. Typical candlestick mentality would be, well, I'll set my stop one tick below the low of the previous candle, which would be here, 44.5. Yeah. For me, I know if this pattern breaks down, I'm wrong, which is 45.25. Yeah. I've got best part of a point of reduced risk. So that's how order flow can benefit you on longer time frames, both in terms of reducing your risk intraday, but also actually qualifying the structure between in the session, in the day, as to interesting areas. Yeah, not relying on candlestick patterns. In terms of spread betting, okay, tax advantages, that's nice. The problem with spread betting and CFDs is you're potentially trading against the broker. They are offsetting their trades in the real market, yeah, and they will adjust their spread. They will bias their spread, even if they say we'll always have, worst case, half a point or a point of spread. Depending upon what their directional view is in the market, they will still put a bias on their spread so that you're entering at a less favorable price. So I would say, yeah, you've got tax advantages, great. But you are not, if you pull up this type of chart, footprint chart, on the FXCM data, you're not going to see the real market. The only way to trade it would be to get the CME data, so you're actually seeing what the futures market's doing, and then place your orders at FXCM. But you can't use the volume from one spread bet or CFD provider because it's not the real volume. It's only the volume of that brokerage. So order flow can help you. But frankly, if you're serious about your trading, you need to trade futures because that's where the volume is. And I can remember a while ago, I was playing games on the various UK spread betting bonus offers. They say deposit 10k, we give you £1,000 free trading credit, what have you. I was basically using all these opening credit offers as an arb to trade risk free. And I think, unlike most spread bettors, I was basically trading, real stuff, so ES, GC, CL. And I remember getting a call from one of the account managers at this place, and they asked me where I was getting my volume information from. They could see from the trading style that I was trading using order flow off the futures. So if you're serious, I would encourage you trade futures. So we've had we do have a lady member who started out actually trading the DAX using CFDs, and I taught her to trade CL futures, and she was scared of that initially because she thought the CFDs were reducing her risk on the DAX because she could do less value per point, but she was never making money. She wasn't making money because of the spread, and that's the problem with the spread betting account. So hopefully that helps you, Lewis. I suspect you're spread betting, you're UK based, so you can pop that in the chat and we can engage on that. And I know Arshad is as well. Okay, I'm scrolling down to other questions. McDonald's. Okay, I'll start to do this in order. So, right, Arshad, Iceberg Orders. Iceberg Orders are really popular things to moan about for retail traders because it's so unfair that people who trade with huge size dribble their orders into the market. Yeah. So an iceberg order is a hidden quantity order. If I want to go long 2,000 lots, I can tell my computer, go long 2,000 lots, never display more than 50 in the book, and when they fill, replenish. But you know what? Maybe replenish with a random number between 40 and 60, and you can do that anywhere within 2 ticks of the current price. Yeah. So it is a way of getting large volume into the market and without disclosing the size you want to trade. But sometimes people do disclose the size they want to trade. So these orange numbers here, this is information from the CME. It's called Markets by Order. I've told my platform to highlight individual large orders. So here, although we've got 318 contracts, yeah, in the book, I know there's a single order of 200 here. So retail traders get really hooked up on must spot an iceberg, must spot an iceberg. Well, the thing is, what are you going to do? Yeah. Are you going to trade in the same direction as it? Are you going to trade into it? Are you going to be able to catch it at that moment in time? Actually, if an iceberg order, flipping hell, that's a really hard thing to say. If an iceberg order or any other large liquidity consumes all the aggressive trading that's going into it, which is the condition known as absorption, we can see that anyway through the delta at price, because we can see absorption by reading the delta at price. So my question would be, A, why do you care about an iceberg? Because once it's finished, we know the effect it's had, which is absorption. And are you aiming to catch this in real time? Well, Arshad, if you're in the UK, you're 80 milliseconds away from the CME, yeah? So the algo's feeding the order in, the iceberg order, yeah? It's happening at a millisecond or less. It's next to the CME's computer. So it is enacting before you're even seeing it print on the screen. If you do use some, fancy Furu add-in to spot the iceberg, what are you going to do about it? Are you going to trade into it? Are you going to trade away from it? Yeah. So what's more important, I'd say, as a discretionary trader, is understanding what is the impact of large passive traders, because that's what an iceberg order is doing. Yeah. It's enabling a passive trader trading using limit orders to feed their size in without being seen. And then we can understand there's potentially supply or demand at that level, and then we can trade off it. JB is saying, hi Lee. Hi JB. I'm a big fan of Sierra charts, been using it for years. You've also had a subscription to Emoji in the past. Good man, but not currently. How would you best describe the difference between cumulative delta volume versus cumulative delta up down tick volume? There's a question about this on our Facebook group as well, I think. Do I prefer one over the other? Is it market dependent, thinner versus thicker? I actually have no interest in cumulative delta whatsoever, JB. Uptick, downtick is purely there to overcome bad data feeds. Yep, there are some data feeds which provide unreliable actual trades at bid versus ask. So the reason for uptick, downtick goes back a dozen or so years to overcome unreliable data feeds. I don't think you're going to get an edge using one versus the other. Yeah. You want to use the actual volume. You don't want to use upticks or downticks. And if someone's saying to you, oh, it's better to look at price changes and count those and the volume, they're talking nonsense. Because the reason platforms are doing uptick and downtick is because historically, and even in some markets, things like Nifty index in India, the volume that comes through is not accurate. Interactive brokers, for example, their feed is terrible. It's aggregated. They will backfill data. So it's for these poor quality feeds, which is why uptick, downtick exists. The reason I don't care about cumulative delta is, well, let's think about what it's doing. If we think about bar delta, and let's say using whatever 5-minute chart, who cares? The bar delta is an aggregation, or it's the closing view of this period of time, let's say 5 minutes, which is wrong. Market doesn't care about 5 minutes. So we are sampling what has traded over 5 minutes and summarizing that in the bar delta at the end of that period. Then we're accumulating it since the beginning of the session. So we are 2 levels removed of what's actually happening right now, which we can read here in the footprint and in the dome and on the tape and interpreting delta at price. So do you want to make your decisions based upon the pattern we see in these 3 or 4 price levels where we're trading right now? Or do you want to base the decision on some wavy line that's going along historically, where the sampling period on the wavy line is whatever arbitrary and therefore wrong period you've sliced your chart into, it's far too slow. So my view on this, JB, is it's a weak way of using some low-level order flow concepts that appeals to people that have been brought up on technical analysis, which is a lot of retail traders, and whatever it shows is too coarse. So when people look at delta divergences, and you see the same thing whether you look at bar delta or cumulative, you're just seeing it in a graphically different way. We can see
Lee, you got accidentally muted.
Yeah, I wasn't sure if that was me or him.
Yeah, I know it wasn't me. So,
Okay.
So basically, anything cumulative delta, bar by bar delta, all you're doing is stretching out the conditions at the end of a rotation horizontally over time, and you are removing yourself further and further from what's actually happening now. Fudge it even further with uptick, downtick versus the actual volume, and you're even further away from what's happening. The further away you are from what's happening, the more risk you're taking on. Yep. So hopefully that helps. It's probably not the style of answer you wanted, because I'm saying bin it. Yeah. But there's the facts from the raw data. Okay, Pete's question looks interesting. How can someone get into the framework of just a reaction and asking why always? Because I feel screwed on that part, despite always getting directional bets in thought mostly correct. Pete, we are trading. Yeah, it's our function to extract money from the market. The why, who the hell cares? Yeah, we are trading what happens. We're not trading why. So we are trading reaction to things occurring. We don't care who's doing it. We don't care why they're doing it. We don't care why stuff has gone up or gone down. If you want to trade the why, become an economist or a central banker. Yeah. If you want to make money quickly at low risk, you trade what? So I don't know how to get in the framework. I think, the way you get into the framework is learn to read what's happening and capitalize on what's happening. And one of our members, was it last week, I think, in our fishing trip, or we did a clinic on liquidity, somebody was asking, weren't they, about if we see a big order here, so big order in the MBO, does it mean X or does it mean Y, and who could it be? And I admonished this person, I said, who the hell cares? We'll never know, and we don't care. What I do know is there's a single big order being here, and it's giving us a clue. So we add simplicity, Pete, which is a really hard thing to do. But the why can be because someone punched in the wrong number on their computer. Yeah, that's not going to help us. What helps us is interpreting what's happening and acting on it. Okay, people are saying that in the same way. Summer's bragging about her cha-ching. Summer is a monster. Yeah, okay, you've been in the UK, Lewis, thought so, the spread betting reference. Oh, Thomas, what's the risk-reward ratio on trades? I don't use risk-reward. None of us in TRG use risk-reward, Thomas, because it's nonsense. It is retail, furu, technical analysis nonsense. We enter based upon what we understand in the volume, and that tells us where we're wrong. We will take what the market gives us, and we also understand where we might go. But there is no risk-reward ratio. We don't do take profit 10, stop loss 5, or take profit 10, stop loss 50, because this is rubbish. Yeah. If you use fixed stops, you are going to lose money. Yeah. You have to recognize where you're wrong. You have to recognize potential inflection points, and you trade that. So when I was in a prop firm, what was drilled into me is stops are how you lose money. Yeah. I know what this pattern means, for example. If I'm trading based on this pattern, I can see if the conditions change, and I can decide if I want to get out. If I've got long based on this pattern, I will have a catastrophic stop that I'll put in maybe, I don't know, 20 ticks away, something like that. My risk management will get me out if I lose $200 on the day in my account. But I would not enter this with a fixed stop. I choose to exit every trade manually and discretionarily, whether I'm right or wrong. So no risk-reward ratios. You have to remove this idea of 3-to-1 risk-reward ratio, blah, 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 from your thinking if you're going to be a trader. Archad saying, I like the way you've answered my question, as now you're making me think about price delta. No such thing as price delta, Archad. Are you saying if the market is falling and stalling with a positive delta, then that could be absorption? No, if the market is falling, we would expect negative delta to be a sign of absorption. So, Arshad, you've picked up some of the right terminology, but you need some education on actually what this stuff is and how it works in order to understand it. Yeah, you need to understand this stuff from the first principles. Pete's saying, what advice would you give a conservative scalper from product selection, as it's important to risk management? Don't mind answer. Okay, Jeff has answered this well. Depends on your style. Yeah, NQ is a video game, quick in, out, 20 seconds you've traded. ES, you can scalp in under a minute. GC, bit of both. Yeah, it really depends on your style, your personal oscillation rate and frequency, how active you want to be, how analytical you want to be in terms of the framework of the market. Arshad, do we use divergence? No. Late and inaccurate. Nonsense. So divergences. Okay, Arshad's mentioned binary options. Total trash rubbish, even worse than Forex. If you want to make money on binary options, then become a binary options broker / bucket shop, or run YouTube videos with fake money and a hired Lambo and a Louis Vuitton bag showing, yeah, man, this is the binary options lifestyle which I'm living. Yeah, utter rubbish. So, what source of information do you use for sudden and unexpected news? Necromancers. We don't use news feeds. Yeah, we trade what we're seeing. The price action, the volume is telling us what's happening. The why doesn't matter. Yeah, if you hear on your squawk something, it's too late. Yeah, price has already moved. Do you care that ship got stuck in the Suez Canal or it's moved? It's too late. So we stay aware of when scheduled news is occurred, but newsfeed, waste of brain processing cycles. You don't need it. So Lance is asking, can you share an example of what HMOMO is and what isn't on Ninja? Same for HV reversal. Are you happy to take that, Jeff? Because you've got the poison chalice of Ninja.
Yeah, there's a whole bunch of examples of that posted, but yeah, let me. Not exactly sure what you're asking. They occur constantly. You just want me to show some examples of them?
I think he wants to get his tracing paper on the screen and copy them down to then put over his live charts so we can trade them.
Yeah, Lance, can you answer what I just said so I can kind of figure out what it is you want me to do? Just examples? Is that what you're asking for?
Yeah, I think so. I just want to see what's a good one, what's a bad one.
Okay, we can do that. All right. So, well, let's see. There was a beautiful high volume reversal just now in gold, right down there on the lower left side of the screen. Let me turn on the spotlight thing here. So that was a good example there in gold, but let's, NQ typically has lots of them. So let's find a few. All right, here's a perfect one right there. So there is an ebb and flow range we're trading right in here, right? And then it got sold really aggressively. So that's HMOMO as soon as it broke out of that range. And then the brakes went on here for whatever reason. Again, the selling just came to a halt and the delta flipped over and look what happens. Beautiful high volume reversal. So there's—
You know why that happened, Jeff? Sudden, unexpected news.
Yeah, and again, I don't care why. I'm just trading what's happening here. So, a break of this range up here was a great place to jump in short if you're fast enough. Otherwise, you want to just sit on the sidelines and wait for this kind of behavior and grab the long. And, that turned out to be a really sweet long, right back to, surprise, surprise, the range that we left with high Momo. So there's a perfect example. It doesn't get any better than that, Lance. Questions on that?
I think what would be interesting to hear from Lance is how is he struggling to see it? And I bet it's too early or too late.
Yeah, and also, Lance, you're a good example of somebody that's come in and watched a lot of videos and asked a lot of good questions, but has not been through a boot camp. So this stuff is all still fragmented for you. We've been over this a few times. And I know you're watching lots of video and working really hard, but you're a really good example of someone who could benefit just from getting it in one course instead of just, going and watching random things 2 hours at a time. So that would be the solution for you, really.
It's the difference between reading a book on learning to play the piano or seeing a piano teacher.
Yeah, or watching a video of a college class. It just, at some point you just can't continue to pay attention. So anyway, let me answer the other. What is H Momo? It's high momentum. It's a price action category that we have that we trade against.
Okay, I'll take the screen back for Pete's question.
Yeah, why don't you go ahead and the structural one? Yes, why don't you talk to that?
Just got to make sure I've got the right screen. I've got a BS in computer science, but it doesn't help me use Zoom. Here we go. I think I did it. Okay, so Pete's asking the limitations of the use of volume profile alongside order flow, or how far we can use it as market-generated information. The volume profile is useful for a few reasons. But we don't need every data point in it. It tells us the shape of the day. Yeah, we can see where there are edges of high volume areas. Yeah, so we know areas that are popular to trade in, and we'd expect reaction at the edges. So my volume profile is this grey thing. I set my screens up so I actually see the actual bid and ask numbers. I'm turning it into a footprint for the whole period. What I'm also interested in, though, is the delta profile, the delta at price. Yeah, not many people really teach this or teach it accurately. In fact, on the web, it's really hard to find anyone who's doing this stuff free and explaining delta at price, because, yeah, the edges are fine. Yeah, low volume nodes, high volume nodes, too jargon, edges. Yeah, edges of high volume areas. But the delta profile, areas which are showing absorption and aggression and where we are relative to them, is much more revealing. So in terms of limitations, I don't think there's limitations on it as a tool. By comparison to market profile gives us the dimension of time. Yep. But it is an older visual model because it was put together before we had real-time volume. So they're actually complementary. The limitations, I think, on any of these profiles are going, oh, value area high. Yeah, really important. No, it's just something a lot of people are looking at. Or VPOC, volume point of control, highest volume traded. Okay, but what if there was one contract less that traded 15 ticks away? Is that any less important? So the limitations are actually the very rigid and coarse approaches that some practitioners and some traders use on some facets of the profile without and trying to make this sacrosanct, or saying, VWAP and price will revert to the VWAP. No, VWAP will chase price based on volume. So this is where it's misused. And value area, so the reason value area is set as 70% of the volume is because if you're standing in a trading pit with a pen and pencil, maybe a calculator, it's easier to do mental arithmetic of 0.7 times something than 0.682, which would be 2 standard deviations from the mean. Yeah, and therefore capture 90 whatever % of the distribution. So all this stuff is arbitrary. The limitations are the coarse and rigid application of this stuff, and actually the overcomplication, rather than picking out the right data points within the model, which is what it is. Yeah, so it's a model of the market, and just picking the right trading points and treating them as a guide. That would be my take. So that was Pete. Bootcamp. Wave delta and wave volume from JB. I think you've spoken to that, Jeff, haven't you? Scalp.
I have. If you'd like, I could show a quick example. I'm not sure if that's of value here because the conversation got a little farther along. Wave delta versus wave volume, and wave delta is absolutely useless. So I just want to emphasize that wave volume is the value in wave volume is seeing Wyckofian behavior. In other words, when you're in a range and the range is established, to break the range, volume has to go up. That's just the way the math works, either direction. And so you see that in the wave volume, but the delta can be off significantly and still have it move based on the volume. For example, what created that move? What if somebody swept the book with a sale of 1,000 lot and took out 6 levels in the ES? The wave delta would look ridiculously big and you'd say, oh my God, short that. And the correct move would be no, buy that because he's done. And that's that. So this is an important distinction. How do I expressly use the linear regression lines? That is not something I can simply explain in just a Q&A session. Pete, aren't you a TRG member, or are you not, Pete? The person asking the question. I'm trying to be able to frame the answer a little bit. You're not. Okay, so your name looked familiar to me. That's the first 2 weeks of the boot camp. In a nutshell, what I do is I use linear regression to establish the very, very, very short-term range on a 15-second chart. Because of the nature mathematically of linear regression, the thing I just showed an example of with HMOMO and leaving a range and then a high volume reversal back to the range, that happens all day long within a single linear regression range, which changes constantly, but it's always accurate to the right now. So that's how I use it in a nutshell. And that's literally the first 2 weeks of the boot camp, which is price action scalping. That's what we do. I hope that's a decent answer. It's hard to answer a question like that in just a Q&A like this because it's fairly in depth. Okay, super. Feel free to ask a follow-on if I can elaborate a bit.
And there's a similar in-depth question from Alan. He's just downloaded Sierra chart demo. Is there any reference material on how to duplicate my point of view without the emoji tools? And he doesn't even see where or how to get the numbers chart. So look, Sierra chart has a steep learning curve, very accurate documentation, but it's a bit terse. If you go to the Emoji Trading YouTube channel, there is a series of 7 videos. On one of them actually walk through setting up a basic footprint chart. But I think, and Alan, I don't know how new you are to order flow. If you were to clone this without actually understanding what it's showing, emoji or no emoji, I don't think it's going to help you. This is a tool set in order to interpret volume at price, delta at price, and market structure. Treating this as a point of view in a chart. No, let's go trade off this chart. If you can't read the raw data, it's not going to be of much use. So within TRG, we share various chart templates and this kind of thing, but this isn't a magic chart where if you see this, do this, if you see this, do this. This is giving me a lens into the market that enables me to make decisions based on the raw data. But if you want to learn how to set up a footprint, I did a walkthrough several years ago that you'll find on the Emoji channel. It's about 2016, 2017, and it's the first session I walked through the numbers bars. Oh, come on, brain, I just lost my train of thought. Also, Frederick at Simple Systems Trading has a free ebook, which is a beginner's guide to Sierra chart. So that's a good way of getting into it. I mean, there are loads of tutorial videos on Sierra chart. Go onto YouTube and do Sierra chart footprint, Sierra chart numbers bars. You'll find lots of walkthroughs. But if you're not understanding, why have I got this column here and this column here, it doesn't matter. I could send you the chart book. It wouldn't help you. You've got to understand, well, every element on this view is there for a reason. Yeah. If you don't understand the elements and don't understand the reasons they're there, this is noise.
Lee?
Yes.
Let me grab the screen back here. I still need to elaborate a little bit on this question from the linear regression and ranges, and
sure.
It'll be easier to just show it. So otherwise, we're going to end up not being. We're going to get people confused. Okay, really quickly. Again, linear regression, I can't teach this in a Q&A, but I'm happy to answer the questions to get you on the right track. So the bottom 15-second views on my screen are linear regression. Here's an example of it breaking the range. And you don't throw it out when you break the range. That's your 4% of the 96 versus 4% that you're measuring the range on. So this is a very, very short-term event because range is a short-term event. When a range breaks, the volume and the aggression will always increase. And that's the clue. You either go with that if it continues to do that, or it goes back into the range and it's a perfect scalp right back. So with respect to the question of time frames that Pete asking, for the longer you go, on higher time frames, the less useful it is. It's complete noise because you have to understand what regression is telling you. We are only interested in the range here. The slope is meaningless, and what matters is the high and the low of the range, because what that is telling us is that all of the recent trading of that particular interval, 96% of it will fall within those 2 points. And that's the statistic we're trading against. We're not using anything else. There's also a little trend indicator running in here, which is something different. Let me show you an example of it without that on. So hold on a second. It might be a little easier to see here. Okay, so that's an example of it just on the ES one here all by itself. And you can see it will tease edges of the range. And if you watch I use a bar by bar delta of the volume because that tells me which side it's going by, and that's all I need to know. So that right there would have been a sweet little scalp entry long. Just on that basis, nothing else matters. If you try to extrapolate this out into longer time frames, Pete, what happens is you end up with a big giant range, and then you start thinking like a technical analyst. Oh, well, we're going to buy support and sell resistance. You don't sell the top and buy the bottom automatically. You trade what's happening at the top and the bottom. Sometimes the range breaks, and sometimes it does it really aggressively. And often that's a good time to join it in that direction. But you have to see what's happening at the point of inflection. That's the key to this. I hope that's helpful. Let's see, there was one other question I wanted to answer along with that.
You asked about higher time frames?
Yeah, I did that. I answered that just now. If you put it on a higher time frame, it becomes less useful. The time frame I use is on a 15-second to 30-second bar. That's any chart longer than that, even on a 1-minute chart like these up here or 5-minute, you'll end up with a big giant range, and it's meaningless because it's taking into account too many different events. So hopefully that makes some sense. Let's see, there's a question about the boot camp. I'm going to real quick put a link up to that so people can read about it.
That's from Arshad, I think, isn't it? Yeah.
I
just want to talk to his question about the delta profile, and a similar suggests question about the LRCs, Arshad. I go through delta at price in a single session that's about 90 minutes, and that typically blows people's minds, and they then rewatch it. And it doesn't blow their minds because it's complex, it blows their minds because it's a totally new concept. So I can't really elaborate a little more. It's part of our boot camp. Yeah, it's a full module in our boot camp, but it is probably, I'd say it's the most useful concept you are going to learn about reading traded volume. So, Arshad, satisfy your curiosity and join our boot camp because you're going to get probably, 24 hours of live education for $1,000. You're going to be paying $40 an hour, to avoid a lot of wasted time.
Well, I'm going to answer Pete's question before he directed it at you, Lee, but regime change and seasonality in day trading, what could be further from being important? I mean, no other way to comment on that one.
Seasonality affects my performance because in the winter, I prefer to get up later.
Let's not hear about your performance, Lee. Come on.
Yeah, exactly.
It's just not the venue for that, sir. Come on. Pete, one of the biggest mistakes new traders make, and I'm at this 48 years, so I've made every mistake. And I'm not 48 years old. I've been trading for 48 years. I'm 61. And the biggest mistake you can make is thinking too hard, having too many things to think about. Narrow it down. Like, for example, just learn to scalp momentum, nothing else. What tools do you need to scalp momentum? You need this. That's it. A 15-second chart. Nothing else. You don't need Jigsaw. You don't need domes. You don't need Sierra chart. You could do, that's a good basic place to start.
And even so, Pete, we had a question about ATR. Why do I do a projection of ATR on my chart? Because I'm encapsulating the seasonality and regime change. Yeah. It's a very minor data point for me, but I'm not even classifying it as seasonality or regime change. I'm looking at, here's the output of the last month's average range. Here's where it means we might end up. So I'm distilling away all of the input factors of it's summer, or it's summer and an oil tanker has exploded or whatever. Who cares? Yeah, I'm distilling it down to a single data point.
I have a single data point. I just track the VIX.
Yeah.
It's either risk on or it's risk off. Right now, we're risk on. If we get back up to 27 and head toward 30, we'll probably be risk off temporarily or longer. It's that simple. Don't overthink it.
Mm. And the idea of daily prep and this kind of thing, I think once you really get into understanding what's important, you can really start to minimize the amount of analysis that you take on. Because
you've got
true. A set playbook of what you're looking for and what you do, and the opportunities are then available for you every day. I think, I probably 5 minutes of prep, maybe.
I used to prep for hours every night. I used to work 2-3 hours every night looking at price levels and previous days and all that. I had this giant column pad that, like accountants use with like 20 columns, and I would fill that out by hand every night. And it blew my mind when real-time order flow data came along in the mid-2000s. I literally could throw out 90% of that. Yeah. I was stunned, but it was such a, now I sleep in. Sometimes I get up and have a cup of coffee right at the open. It's a totally different life.
Higher time frame. I'm going to look at the weekly, then I'm going to look at the daily, then I'm going to look at the session. I'm going to scroll to the edge of the chart, look at the numbers. Now I know where I am. Boom, done.
And you should always use larger time frames to understand what's going on.
Yeah. There was a good question. Oh, Thomas, how many trades per day do you usually have? Good question.
That's a great question. When I'm scalping, I could easily do a couple of 100 to 1,000. If I'm structurally trading, it's generally below 6.
Yeah, but Jeff, all that commission.
Yeah, exactly. Who cares? It's a cost of doing business. Yeah.
And it's similar for me. I will look at a structural setup. I might have 2 or 3 trade ideas during the day, which are sort of directional within the market structure, but I will trade around that. So it can easily be a dozen trades within a larger move. But it's whether we're thinking, are we scalping the price action right now? Which is a setup on its own. If this is happening, do this. And how many times can we do it? Or are we seeing potential of a decent move, but we can still scalp within that move? So we can, price action, is always there. Yeah, at any point of the day, you can scalp the price action. Trades based on market structure, yes, maybe half a dozen opportunities in the day. You can still trade the price action with a view as to what's happening within the structure. So you have a lot of opportunities every day. But how long do you want to spend in front of your screen? In my case, not that long. Arshad saying he's got no pride or ego. He's on universal credit in the UK and he wants to learn. He's asking for that's something to take offline.
Yeah, why don't we talk to him separately?
Yeah. JB, so Arshad contacts us. He's a web contact form. JB, do you guys pay attention to IBPs like 1.5? I don't know what IBPs are.
I'm assuming that's probably IPs with a typo.
Initial balance projections.
Oh, that could be.
Yeah, that's what it is. It's
so no. Given we've had anything that is not on the points of view or charts that you see on Jeff's screen and my screen, we don't pay attention to. So, when people go, do you use RSI? Do you use MACD? Do you use phases of the moon? Is it something that you're seeing on the screen? No. Ergo, we don't use it.
I totally agree with that answer. I just want to add one other element to that. I never look at anything fixed like that. I have the initial balance, and I'll look at how far we've extended from the initial balance, high or low, but it's always relative to the price action and the energy. Like, look at, as we're picking up to the downside, look at how my 15-second charts at the bottom of the screen just all lit up with the selling. And now as the buyers are coming in, we're seeing the edge of the range getting bought. It's so mechanical like that, and it's not mechanical to trade it, but if you get used to just looking at one simple thing and trading that thing well, and as long as that thing is based on what's happening now and not some arbitrary number like a pivot point or a this or that, but this is being created as we're watching the trade. This is the current trade. That's all you need, particularly if you're scalping, Pete, and you've been asking questions about scalping. The art of scalping is staying in the now. Nothing else matters. Now, there's a good question about emotional management and whatnot. We have groups on this that meet a couple of times a week. The answer is it takes really, really good mental skills and discipline and meditation to be able to stay in the now like that. And it takes a lot of practice to be good at it. And that's why having a support group of other people around you that are doing the same thing is really good. And that's the cool thing about TRG. It isn't people posting their furu nonsense indicators. We're all talking about the order flow, and people trade it differently, but we're sharing our emotions and we're sharing our feelings and we're sharing our successes and failures. And that's why TRG is such a cool community, in my opinion.
And the emotional stuff is the hardest thing because it's not quantitative. I can't say my monkey brain is strength 3 today. When it's strength 3, do this. It's the hardest thing, and that's where the community is really useful. And Darren, one of our members turned tutors, is so insightful. This just reframing what's happening for various people and facilitating conversation about this helps find methods to manage it. So what JB's talking about, this is a sort of analysis we do on market structure. We're looking for repeatable patterns. So, okay, if ES touches initial balance projection of 1.5, 84% of days, that's fine, but it doesn't mean that you've got a setup there. Yeah, ES breaks one side of the initial balance pretty much every day. It breaks both sides about 40% of days, 30 to 40% of days. These stats on their own don't teach you how to capitalize on them. Unless you want to enter one tick before that level and exit at the level. But we want to trade for more than one tick on that sort of idea. You're welcome, Darren. You know where to PayPal for the fee too. So what else can we... You were going to talk about the bootcamp, I think, or weren't you, Jeff? You're going to pull up bootcamp costs and show it on the screen.
Oh, tell you what, can I give it the share back to you?
Yeah.
Do you have... that... let you have that one. There you go.
Cool. I
also wanted to just comment on that statistic that a lot of people, when they first start learning about market profile, they look at those statistics and they say, 85% or 84% of the times this happens. And that's really misleading because it's true, but you have to look at other considerations to make that useful. For example, the statistics that we'd like to trade, the percentage of times that the initial balance high or low breaks, one side or the other. You can't just use that in a vacuum and say, oh, it hasn't broken yet, so I'm going to take the trade. You have to look and say, well, which side's stronger? Which side's weaker? What's the price action right now? Which way are we more likely to go? And then that statistic starts becoming more useful to you.
The stats are an interesting starting point, aren't they?
Yeah, exactly.
But they're not trades or trade setups in and of themselves. It gives us a framework to look for opportunity. So somebody, I think it was Arshad, was asking about the boot camps. So Zen and the Art of Order Flow Trading is here. The next class starts on the 5th of April. It's $997 for this flipping machine, which is only locked down
doing
for
that
trading.
again?
Yeah.
Oh, can you not? Oh, shoot. Okay.
I can do it. You want to hand it to me?
Why don't you do it? Can you do it real quick, JVC?
Yeah, absolutely.
If you can't, give it back to me. Sorry, guys. Yep. This is a Zoom problem that we will get around real quickly here.
No worries. You should see my screen. Yes.
Yeah, you got it. Okay.
Fantastic.
And your mouse works. Okay, cool.
Well, let's see. Let's see if I can click on. Yep, there we go.
All right.
So thanks, JVC. So it's 12 live sessions. We also do a few ad hoc live trading things, and we pull our students into some of the regular weekly TRG events as the session goes on. Everything is recorded. We have a dedicated channel in our online chat community, the Pits, where we set homework and bits of guidance. This time around, we're including a couple of 30-minute coaching sessions post boot camp with Jeff or myself. One each, both in one, doesn't really matter. And there's a month's TRG membership at the end of it when you graduate. And yes, there is a new correlation module on intermarket correlations, how to trade the equities as a single group.
Yes, we're going to do that toward the second half of Module 2.
Yeah, so this is like 25 to 30 hours of live education for just under $1,000. When we've taken hundreds of people through this now, the majority of whom have remained in TRG as members and have good things to say. Thank you very much. So
many of whom are here today.
Yeah, and what we've done in this, for our guests, we have really taken everything that we have learnt about trading and order flow for scalping and structural trading and distilled it down to what's important. And I think on our Facebook group, a couple of people said, they're doing self-education, what have you. It takes so long and you can go down so many rabbit holes. When Jeff and I came up with the syllabus, we really thought, how would we take someone from no order flow knowledge into being capable and safe in terms of scalping the equities and being able to trade some simple intraday swing trades based on the market structure in a short period of time. And we really distilled it down. And there's a few educators out there, one I'm thinking of in particular, they do a 12-week course on footprint charts. Come on, that's really dull. We teach everything that is important to know and how to pull it together in a very condensed class that leaves you in a point where you've got a skill set that you can start to practice and work on, and it can form the foundation of a career in trading. And we've got people who are scalping, doing one-tick drills, pulling a couple of $100 out of the market every day using these methods. So that's the value of our bootcamp. I'm just seeing what's going on. Oh, Lisa has found some new stuff. Yeah, why don't you log into the library, JVC? Because obviously, we're here to deal with TRG member questions as well. And this is also good for our guests to see under the covers, under the kimono.
I don't know if we want to do that. Let's not go there. All right, here you go. What do you want to see?
Why don't we go into clinics and workshops?
Clinics,
because that will talk to who was asking earlier. I think it was Pete, wasn't he, talking about taking the long journey.
Yes, the long road. Yes, the long walk.
Yeah.
For you Stephen King fan.
I want to just address Lance's question. He says, I think my biggest worry is the time commitment. I want to be a good student, but not sure I can attend everything live. You don't need to attend everything live. This comes up a lot because people have, day jobs and whatnot. I think as long as you can commit to doing work on it every day, I think that's the commitment you need to make, because you don't need to be in a live session every day. If there is a live session and you can't make it, if you could watch that live session when the video goes up that night or the next morning and be that caught up, that's all I think that really matters. As long as you can do that, I don't think, because then you're getting the live interaction and you're getting the homework interaction in the pit, which, I think keeps you in the moment, which is what's important.
Yeah, I was about to say the same thing. You've got to be in the same context as the other students, so everyone's learning at the same rate. Whether you're learning live, because we do ad hoc reviews and Q&As, don't we, as well? So you've just got to be running at the same pace.
Right. Now, the next question is also a good one. How often do we do them? Any idea when the next one will be? You're traveling for this one. Okay, so this one is an enhanced version of the last two that we did. We've added some new material, and we're going to show some more detailed examples about some more complex things than we did in the previous boot camps, but we're going to follow roughly the same format. This is the last time we are doing this one in this format. We are going to reconstruct it into a new one for the fall, and it probably will be broken into two pieces. One leaning on scalping price action and one leaning on structure. You could do either one first, because we've had a lot of kind of requests for that. And they will probably be maybe not 2 weeks, not 2 times 2 weeks, but maybe 2 times 3 weeks, separated a little bit like that. And that way people can do it in bite-sized chunks. We don't have the details of that worked out. What we're doing now is that. So I don't think it's going to be possible for us to do another one in May. So I think the soonest we might be able to do another boot camp would be June. Would you agree with that, Lee? Maybe July?
And they may go. I can imagine. We split the syllabus, and the syllabus may be, or these sub ones, they might be stretched out longer, or they might be more intensive, or possibilities of both.
Yeah, that's another thing we're considering is, is it possible to have, like a course component be on a weekend, and then maybe have, the labs or the, sections like they do in university for that during a week. And, it's possible with that kind of a format that you could do it over a longer period of time for people that have jobs. And so we're looking at all of this right now. We've had a lot of requests for different ways. People love the way we're doing it that have attended it. We've had a couple of hundred, as Lee has said. So we really can't answer in detail yet, but you can trust that we're really trying to figure out the way to make it as accessible as possible for everyone, because that's why we're here. I mean, I love to teach. I'm a trader for a long time, but I'm old. And the enjoyment for me is showing other people how to do this. It changes people's lives. I love that. And so the more we can do that, the better. But it takes a lot of time and work to put together a whole new class. So that's where we're at right now. Oh, absolutely. You can apply it to any instrument, because what you're looking at is the action in that instrument. Tomas, there are some examples where you might use slightly different time frames or different criteria on certain instruments because they're more erratic. CL would be a good example of that. Oil, I trade oil as well. Sometimes trade silver, sometimes trade the Widowmaker, natural gas. I trade gold very actively. I'm in it right now. So it works with any instrument, but as always, every instrument has a unique personality and you have to adapt.
I'm thinking Tomas might be based in Europe, Hungary possibly. So potentially he's looking at Eurex or currency futures, I guess.
Yeah, currency futures are awesome I have friends that trade using the exact same techniques I do. The pound dollar, the futures there are really active. Sterling, the same thing is true in euro against the dollar. Those futures are active, and they're active around the clock, and there's really good order flow information. Much, much better choices than trading the FX on those things.
Yeah,
so if there is a good currency futures offering, that's a really good way to go. That's an interesting market. The one thing I would say about that, if you're going to trade any of the currencies, is then you are much more susceptible to news and government related events. So the things that I have said and Lee said up to this point about, news isn't that important. Why? A different ball game if you're going to trade currencies, because, if a government wants to do something with its currency, they can do that really aggressively, and you're not even a cannon fodder in that equation. So you need to be really, really clear on policy changes and when those meetings are going on, and much lesser extent in the equities to have to worry about that stuff. So that's a good elaboration to share. Yeah, the bonds are another one. Somebody had just asked me privately about those. Yeah, they trade pretty slow. I know John Grady likes to trade them. Too slow for me, but structurally the bonds perform very, very reliably if you can have the patience to, it can take 2 hours to get a tick, but there's people that like that.
And actually, for Pete, if he's looking at 6A, I'm imagining maybe he's trading late night Europe to get the Asian hours. Mini Nikkei 255 is a really interesting one, which you can trade through AMP on CQG. I mean, that's very much like ES. AM plus 3 eat. I don't know what that means. Morning.
It's morning and he has to eat. Oh, East African time, so it's daytime. Okay.
So 3 hours ahead of GMT. Okay.
Well, I would look seriously at gold. Gold trades really fun in those hours. GC or micro GC.
But actually, 3 hours, for me, I very much like trading, CME mornings during the European afternoon. Suits my lifestyle. Yeah. So actually, if you are, in this case, 9 hours ahead of Chicago, so you can trade CME in the early evening, 5, 6 p.m. your time, Pete. That's comfortable. You only need a couple of hours really on CME.
Oh, I totally agree with that concept that you just said. That's a really good point too. I like to look at it in terms of what are there, if I can just, with my life and my job and whatever else is going on in the instrument of the day, my flavor, whatever I feel like trading, as long as I can find a couple of good hours and either, make some good hourly income scalping or put on a good structural trade, that's ideal. So, don't try to look for being available for the whole duration of that market session. Just, can you pick out a couple of hours where the action's good and you've got an edge?
It's like your surfer friend, isn't it?
Yeah, exactly. I have the people in TRG have heard this story a lot, but the visitors haven't. I have a friend who I went to high school with in the same area in Southern California, and he's a professional surfer and a very high-end professional cabinet maker, woodworker, and he over a beer in a bar once with my laptop, he saw some things I was watching, just kind of taking notes on my day, and he said, "What is that?" And long story short, he trades the open for the U.S. session. Scalping the momentum, and that's literally all he does the first hour, and he couldn't tell you anything about any of the stuff we've talked about today, value areas and none of those things. All he does is when the market opens and sometimes there's a really good directional move, he trades it, and it's like surfing for him. He just, that's a good one, I'll hop on. And that and his other business, his cabinet work, allows him to fund worldwide surfing excursions that he goes on. And I've tried dozens of times to say, God, you could do other things and you could learn to trade later in the day. He's like, why would I do that? Makes no sense to him. I've got it. It works. It fits what I do. And I don't want to know anything more about it. Keep
Which is something a lot of retail traders fall into the trap of. The more I trade, the more money I make. No, the more size you trade of the thing that you're good at, the more money you make. You don't want to be in front of a screen for 12 hours a day. You want to be in front of a screen for 12 minutes a day. JVC, I heard you breathing. You were going to say something.
Oh, I was just gonna. It's like you're reading my mind. I was just gonna say, is there anything else that you want me to navigate to since I've got the share? Did you want me to show the pit or anything else in the library? Or
I think you've assisted Lisa on her revelation of the more details thing.
Yes.
For our guests, we have hundreds, maybe thousands of hours of content now. Everything's recorded these days in 4K where we can. So you can always dip in and find something new. Weekly live trading fishing trips like we did last Thursday, weekly Q&A like today, Sunday reopen, Monday kickoff, 4 or 5 regular live events every week.
Yeah. There's even the somewhere in here the original 2019 workshop rather.
Yeah, isn't it down at the very bottom?
Well, it's in workshops, actually, I believe. Yes, there it is. Docs 2019 setup workshop. So this is what started it all. Before there was a TRG. And in fact, for those of you who find this kind of stuff fascinating, because I know I sure do, this is a mind-blowing workshop, not just because the content is great, and it is, it's cool, but because of when it took place. Because this overlapped with Corona hitting. And oh my God, the stuff that was going on live during these sessions while he was developing this. Oh man, it's wild. It's an incredible time capsule of a wild, crazy time in the market. So I dig it just for that alone.
So I'll happily take the screen back, JVC. And,
go for it.
What else can we answer from our TRG members or anyone who's come along to say hi?
We're pretty well balanced here. I'm just looking at the price action. It's a very interesting spot. We're right on the volume apex, and it would be hard to be more balanced than we are right here in ES anyway.
Bottom is good. Top is all right. Has it been a two-sided day today? No,
it has not. No,
we broke the high.
No, we broke the top. Yeah. Looks like it potentially could take another run at the top, although it doesn't have any momentum at the moment.
Lisa's got a really important question for you, Lee. How are the pigeons?
Yeah, they turned up about 30 minutes ago on schedule and did their thing.
We need the pigeon cam feed into the pit.
I need to, because I rarely use my webcam. I think I'm going to relocate it, stare outside the window, and we'll start live streaming.
You need to track the market activity at the time when the pigeons show up and the time when they leave and look for a statistical correlation.
Right. It's like that monkey index that they have, where they have a chimpanzee throw darts at a list of the S&P 500, and there's actually an index based on that, and it's outperformed a lot of hedge fund managers. It's hysterical. Something
I was looking at yesterday, I've been fascinated by this whole container ship thing. For whatever reason, these canals, Panama, Suez Canal, they interest me. I don't know why. Some point I plan to visit the Panama Canal, and then I know after 9 hours of going down it, I'll be really bored. But the infrastructure interests me. And I went on to one of these live nautical tracking sites where, every vessel is visible. And I was zooming in, I could see it, so it was there. But I can recall this, of course, is how some institutions were tracking the tanker inventories. And they were reading the live shipping sites, understanding the vessels, where they were, what the movements were like, and using that to trade CL when CL went negative.
That's kind of brilliant.
Yeah. So, all these data points, I'd say, there's a macroeconomic data point, an information source that is interesting if you're going to explore the real world, certainly on real commodities. And what's that? There's is it Quantopia? There's a website, a service of alternative data sources with its own API, and they gather together. They're like a marketplace for interesting data feeds and stats that you can then start to query and explore for correlations. And it's things like, let's understand all shipping vessels with this tonnage greater than blah and where they've been in the past day. And this stuff gets fascinating.
Rabbit hole alert.
Huge. Yeah.
So Amy brought something up
yesterday.
Oh, that explains it. Okay. So Amy brought something up for the TRG members I wanted to point out. Thanks for the reminder, Amy. We're talking about this right now, about exactly when we're going to schedule it, but we're going to kick off a Benjamin Challenge. So stay tuned for more info on exactly how that's going to go, and we'll put that in the pit and let you all know what we're doing.
Just for the benefit of our guests, Benjamin Challenge, we teach people one-tick drills, which is all about how you practice getting really good entries and doing it over and over again. And Amy, one of our original members, she did, 100 trades a day for 100 days, give or take. So took 10,000 trades to get good at scalping. And the idea of the Benjamin Challenge is a way of practicing, can you get in and catch a tick pretty much immediately? Because if you can catch it immediately, you can go again, again, and again. And the idea of the Benjamin Challenge, we run these from time to time, is people will trade, and it's how many trades do you need to get $100 net. So it's 13 trades realistically after commission, assuming no losers. And this is a good way of practicing your entry skill, practicing cutting losers quickly, because we'll look at MAE, maximum adverse excursion, and we gamify the practice. But if you do this 10,000 times, you get pretty good at identifying low-risk entries. So we do these little mini competitions and contests in TRG as a way of honing skills, and it's great. So Amy is our games master, games mistress on events like this, because she really has the one-tick drill nailed.
She's got it drilled, perhaps, you might say?
I'm not sure. Hammered? Lance, don't fall into this trap.
Yep, you just went down the path. Oh, Lance.
No.
We've lost him.
Yeah. Reset. Press the reset button. There are no 2-tick drills or 3-tick drills. The point is, if you have a good entry, it's going to fill for a tick's profit immediately. Yep. Trading for 2 ticks or 3 ticks or 10 ticks or 100 points is different. This is a drill. This is about practicing the quality of entries, identifying good entries and getting out. Yep, it's a drill. I'm trying to find a real world analogy. I can't get
swinging at the batting cages, swinging a bat, and then being in a driving range with a golf club.
Stretching before and after you work out. Can I stretch my leg even further, and will it make me lift more weight? No, you're probably going to pull something. It's a drill. It's not a strategy. Batting cages. Okay, lost on me in the UK.
Swinging a baseball bat to hit a ball that's sitting on a stand or being pitched to you by a machine. You just hit it over and over and over and over and over, and there's no game to be played. It's just swinging the bat.
So what would the analogy be in terms of 2 ticks rather than 1 tick in the batting cage?
Yeah, drilling for home runs, which makes no sense.
Got it.
Or going to the driving range and saying, I'm going to drill on my 300-yard shots. Just you don't do that.
Yeah. Now I've perfected my golf swing. Is there a way of perfecting my golf swing to get a hole in one?
Yeah, there you go.
Yeah, that would be it. Nearhead saying for us it's cricket. That's not cricket, Nearhead. There's a little cricket reference.
I need cricket sound effects for that, but I don't have them. So.
You need that tune. What's it? I've forgotten the name of it. There's a famous theme tune for cricket in the UK. Mine's gone blank. Anyhow.
That one's going to be lost on me, I'm afraid.
Yeah. So, Lance, you fell down the rabbit hole, but we'll reel you back.
Yep. Yeah, JB, you're right. Free throws, same kind of thing. Free throws are not the game. You should be good at them. You need to be good at them. They're really important. But they're you don't do then. How do I do a free throw to win a game? Free throws for 6 points. It's just, huh?
Cool. Layups and this terminology is baffling me.
Poor Lee.
I know. So where are we? We've been going about 90 minutes, I think, today. So
about time. We've got Darren's dojo in a half an hour, so I'm going to need to skedaddle pretty soon anyway.
Okay. So we'll say Burning Desires going once for TRG members and any of our guests. Is there anything else that we can answer today for you? Now is your chance. Okay. Lance saying they're interesting. There are spots he thinks he can grab a tick, but he doesn't think it's a great entry. Yeah, but are you thinking it as an entry as a good place to grab a tick or an entry for some other trade? This is the point of the drill. So what you might want to do, Lance, is I think we've got in the library, we've got kickoff video from the last Benjamin Challenge, and Amy explains the approach to drills. So this is the thing to look at, but you learn it by doing it.
Yep, it's very experiential. There's no other way. You have to do it.
So, Pete, you're very welcome. You can feel free to get in touch with us. Likewise, Arshad, you can reach out to us by email, info@tradingresearchgroup.com, or through our website if you've got any queries. Lewis, hope you've had a nice cup of tea while I've been drinking tea in the UK. Nice to have people here from the UK. You're welcome, JB. Glad that we can. So you'll see from our style that we aim to be extremely clear, accurate, factual, bit opinionated, but we'll stand behind those opinions with facts and reason. And that is the trading style and educational style within TRG. Jeff and I have been at this long enough that we know what works and what doesn't. And we absolutely do not believe in obfuscating or masking this stuff in jargon or magic bean indicators, because that is furu nonsense. Yeah, we believe in read the raw data that's there, learn how to apply it, potentially use tools to make this stuff easier, and then just crack on. There is no magic in this. It's just learning an application, which is what we're about.
But by the way, so real quick, one-word answer to your question, Thomas, about do we use mostly limit orders for entry and exit? And the answer is
yes.
Sometimes, maybe, yes, no.
It depends is the answer.
Yeah,
exactly.
Sorry, I thought it was limit orders or market orders. That's what I wanted to say yes to. Sometimes we use stop orders.
Yeah.
We use all of them.
We use the correct order at the correct time for the correct reason. The right tool for the job.
Yeah. So we use orders, indeed.
There you go.
Yeah.
Well, Jeff and Lee just pick up the phone and call the CME and say, "Hey guys, would you please just do this?" And then it happens. It's amazing.
So, Burning Desires going twice. This is your last chance to throw in any questions. Otherwise, we will call it a day for today. And TRG members, obviously, this will get posted in the library within 24 hours.
Indeed it will.
And to our guests, thank you for joining. Please reach out if you've got any questions about us, our education, our trading styles, how we can help, all this kind of thing. We'd love to hear from you.
Indeed.
So with that, I think we'll draw a line under it. Thanks for your time today, everyone. Hope it was useful. And we'll see you next time.